Good morning, good afternoon, good evening, wherever you're coming from. Welcome back to Dan's Trades. Today is September 25th, 2024. As always, I am not a financial advisor. This is not financial advice. This is purely me reviewing my trading activity for educational and or entertainment purposes only. Do your own research, please. All right, so here we take a look at this is the daily chart on the micro MNQ. We're going to take a drop down into C. We had a bullish bias going into today. Looking for a price to come up and trade into the August 22nd high, which it has done. And then I got a couple other targets that we're looking for the upside. So we are bullish on a high time frame. So if we jump straight down to the 1 minute chart, we'll back up to the morning session here. And we had the opening range gap below, so we had a discount gap. Yesterday's settlement closed, this morning's open, and pretty much immediate 50% fill, and 9:33 we had a full gap fill. And if we drop down into the 15-second chart, even the 5-second chart, we can look at super fine details. And admittedly, today was a sloppy day for me. I had a couple internet issues, so that was weighing on my brain as I opened up the chart, so I didn't quite understand why. But things happened, so it got me a little bit off my game. I wasn't able to get some limit orders in like I typically do. It was a quick moving market this morning too, that's for sure. As we see quick gap fills, even on a 5-second chart, we're looking at, quick moves. So we had quick spike up right at the 9:30 bell, retracement back down, price dropped down below the opening just for a second, and I saw that. So looking at the 5-second, even 15-second, I'll show you that just so you see the difference. Even though it makes me zoom back and forth a lot, try not to get seasick, I'm sorry. Pretty nicely, one 15-second fair value gap right there. Another one up here. And the first minute is this one up here. So we didn't have a 1 minute fair value gap form until there. So I'll bring that back one more time. Oh, that's yesterday, sorry. Apologize for seasickness, just showing you what I got documented and annotated here. So here's the first 1 minute fair value gap, or is what we're calling the first presentation that ICT has presented to us. Really liking that as far as using for trades. Obviously, it's not just a one set it and it's always respected both ways. You have to understand how price travels in and around these zones, and it's very interesting. I find that the top of this first presentation fair value gap also formed right on this new day opening gap, which was from last night. If that alone in itself doesn't help you see that this market is not random, I don't know what else will. Well, I can show you many things that will along the way. So if you haven't seen it by now, keep watching. It takes time. But we'll drop back down to the 5-second just to look at some of the technicals on what I was thinking. Obviously, part of the model that I like trading is on a 50% of this gap refill. So we might as well just zoom right in on that and take a look at when would be a good time. So I'll throw on my executions, grab 2 right there, market ordered. Again, I wasn't in all the perfect sorts. I just knew it was going, or I was anticipating it going. You don't know anything can happen, but high probabilities, over 70% that it's going to get here. And with the higher time frame daily bias, opening with a discount opening range gap, just makes that probability even higher. So market it in, grab 2 points. Today is also, I should mention, a no high impact news day. So I was only looking at scalping ultra scalping, if you want to call it that, getting 10 points at a time, give or take. So that's why exactly here I entered in, grabbed 2 at 20,154 and exited right at 2164 after we had already filled this gap. So I saw a spike above, close that trade out. First model, bagged and tagged. Yeah, it would have been nice to get a little bit better one, but it is what it is. It's a quick moving market this morning. You see that's 40 seconds in after the bell, and then not even 10 seconds later closing it out. Yeah, 10 points is nothing in NQ, but that's how you build blocks. And then we saw the run to the end dog. So that was a beautiful, nice low-hanging fruit target. That got there at the same time as we were creating the first 1 minute fair value gap, and interesting to see. Once we cleared the end dog, came back down, touched it once here, closed up, trailed back down, touched it one more time, jumped up, third touchdown, closed below, just for us, actually not even closed below, but open below then, and shot right up. But pay attention to the times. This is only 9:35, so this is all just opening action. And then I saw this premium wick CE on a daily candle from August 22nd, I believe it is. So I saw one more displacement, price retraced back down. I marked it in one more time here. Should have used a limit order. Again, part of my morning. I've missed a couple trades, but again, 5-second chart, things move quick. So I used market orders this morning, grabbed 2 more contracts here, sold them again, literally as price was coming up to hit this. So 10 more points there, was happy with that. Actually, sorry, I took one off there because I was looking for a potential to run up to previous day's high, which was up here, which did happen, but it was not until after a retracement. So I was happy with taking that trade off. We came all the way back down and hit the very first, or hit a fair value gap that was formed outside of regular trading hours. That's what we're looking at right now, regular trading hours. So if I jump this back over to electronic trading hours, and I will come back to that session, we will see it was from the overnight on a 1 minute. So let's jump back to the 1 minute chart. So the 9:29 candle, which is before the opening bell, has this fair value gap, which is bullish. That price respected, bodies never close below consequent encroachment, wicks do the damage, bodies tell the story. So that's exactly where we retrace back down on the 1 minute chart. Beautiful entry there. Potential. And then the run back up, you see where I was, so I was not part of that. I was already happy with my first executions, and as price closed above, here's where it hit previous day's high, which is right there from yesterday's lunch session. So previous day's high, nice target. We'll see, since we did form a fair value gap, as price was going through it. Take a look at this for your studies. That must be also random. More randomness over here. And now we're in lunch, so now we're going to attack people that are long. So lunch macro is going to target, drive lower. Not trading that right now, I'm just making my review. But that was the higher time frame draw on liquidity. You got another one up here we see is another premium wick CE. That'll be for later. Another one up there. And then there's that daily fair value gap. That'll ultimately also be a target sooner or later. But that'll be in the future. That was today's trading. Really hope I'm not getting you too sick. Sorry guys and gals. So 1 minute chart, quick scalp, second quick scalp, third quick scalp. And had I been in my sorts, I would have let this run. I entered 2 here. Let me jump this back down to the 15-second just so it makes sense. Show you what I was thinking there. we had, and I'm not marking all these. So once you do this long enough, you won't have to draw all the time because not every fair value gap is interesting, but you'll see it and understand it. I was looking for a potential drop into here. Actually, I take that back. What I was keying this off of is my stop was right below this candle. This down close candle in the middle of this run was my stop. When I was long here, my stop was below right there. And it held, and that's actually where I re-entered, or added on, I should say. Bought 2 here, bought 2 there. I was looking for it to be a potential end of the macro because this is 10:04, right after the 10 o'clock open. So 10 o'clock itself was right there. We had to retrace back down to fill and come back down to this inefficiency, grab a couple orders, rally back up. So once I saw that, I was expecting and anticipating price to come up to the previous day's high, but being I was a little bit out of sorts with my earlier trades and the internet going a little not great on me this morning, I cut it off right there. I said, you know, time's just not, it's not moving like I wanted to. 10:10 was coming quick. End of the macro was there, so it didn't actually hit up in there until 10:14, almost 10:15 was when it actually did hit previous day's high. So I'm perfectly fine with cutting that off because my mental, the words escape me right now. My mental had been used up, and I said, nope, I'm done. It's enough ticks for right now. I got a couple scalps, and so I'm happy. So I just cut it off right there. I just closed it. And then, of course, whenever you close it, it goes to where you expect. It's all good. So that's a review of my trades for the morning. Let's take a look, just out of curiosity, what's going on, see if we're still continuing down. Imagine that we're consolidating right around the underdog, so to be expected after the move against the stops in the morning, because that's what the lunch macro does typically. We anticipate it to come back and take out trailed stops. Wouldn't be surprised if it, well, let's see, first presentation, that must be also random. So that's the review today. Hope it helps. Hope there's some insight that you can use. Again, if you got questions, if you like it, throw me a like. I'll keep doing these. And remember, tomorrow is promised for none of us. So live for today. Take care.